Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets. And here today on a fascinating precious metals week and a fascinating economic and world news week, as we'll get into as well, looking at a rebound here in the metals pricing. The Dow and equity markets continue to slide, and the dollar seems to be bumping along the top end of the trading channel while we all wait with bated breath about the BRICS meeting that's taking place
right now,
as well as Jackson Hole coming up. So, right. Rob, thanks for joining me this week. What are you seeing on the horizon?
Well, fundamentally, and I wish Tori was here to outline it, but, the news events that have been hyped for weeks now are here, and we'll see what kind of impact they're going to have. The BRICS are going to be talking and possibly rolling out their new currency, maybe tomorrow or by the end of the week. Jackson Hole, I have no idea what those poor people are going to do. They have dug themselves into a hole. They've backed themselves into a corner. The bond market is not happy. The dollar is not happy.
The people who print dollars are happy.
Yeah, I'm curious as to where the technical points are for the equities market, for the dollar, for gold. I'm just so grateful that gold is back above 1910. I mean, a couple of weeks ago, I thought that would be a pretty solid floor. I was wrong. It backed into the 1890s, and I'm like, oh man, we're vulnerable again. But it has recovered. We're back up to around 1918, 1920. Gives us a little bit of breathing room. I think the rest of the week looks pretty good. I would not be surprised if we have a bit of a sell-off and profit-taking by the end of the week for gold. But the real story is silver. It's up 3.7, 3.8% today.
Well, it's up 10% over the last couple of days.
Yeah.
So let's go ahead and start there then. Since you started with gold and silver, we can start there too. But I definitely want to talk about the equities market, so I'm glad you brought that up as well. So you asked where maybe some of the levels might be in the metals. So the way I look at charts, I'm going back to, say, November of last year, where we put in that bottom down around 1600, 1620.
20, yeah.
And then we had a breakout move from there, which obviously in a couple big steps between November and May got all the way up to 2100 or 2085 or something like that. So when you look at that long term, you brought up the 1910, and we've been talking about 1910 since like March, April.
Yeah, we have.
So we've been talking about 1910 for a long time and came down and hit it in June. Nice little bounce to 1980. And I remember when you and I were sitting in here a month ago on that day.
Yep.
And we said, if we wake up tomorrow and it's over at 1980, you're looking at new all-time highs in gold. And we woke up the next day and it was not over 1980. So we did come back down to that 1900-ish mark. And actually, the spot price got a little lower. The futures market pricing actually didn't put in a lower low.
Futures price stayed high.
So that's good to point out that the futures market did hold at a slightly higher price and actually stayed with this recent decline. It stayed above the June lows. But the spot price did break below. So when we talked about that, my big argument was, okay, well, floors and ceilings, or some people call it support and resistance, but I like the imagery of the house, or steps on a step ladder. So we took our foot off the 1910 and started to step down, and that next step down is probably around 1860. So maybe we're just getting a little, let's call it political concern bounce this week on our way down to it. But just because I like charts to work out the way they're quote unquote supposed to, doesn't mean that they do, because charts are just a aggregate of millions of people making decisions. And millions of people don't always make the same decision every time.
Well, and people have been waiting for what is happening right now. They've been waiting for Jackson Hole.
Yes.
They've been waiting for the BRICS. They're waiting for the rollout of the new Federal Reserve central bank digital currency, what everybody refers to as the CBDC. So maybe they're going to make an announcement about that here at the end of the week. We'll see. I mean, there's been a lot of noise on the internet and on the airwaves about both the BRICS currency and the new Federal Reserve currency that will be introduced. So we'll see what happens. I do think that will put the wind back in the sails for gold, even though neither the CBDC or the BRICS currency are going to be implemented on a broad scale yet.
I don't know if today's the day, but man, I would love to sit down and have a chat about what are the actual pros and cons about something like a CBDC. We haven't gone into that yet. And it's not the foremost conversation topic this week like it was a few weeks ago.
Right.
Because of BRICS and because of the Jackson Hole meeting, the CBDC, at least in the conversations I'm having with clients, has taken a week or two backseat.
Yeah.
But it's been the point of conversation all summer. And that may be something we want to do in the next couple weeks, is sit down and actually say, okay, from a financial and economic analyst and advisor standpoint, what actually are the pros and cons in the CBDC beyond just control and inflation?
Okay. Yeah,
So
let's do that.
Yeah, we'll have to talk about that. In the meantime, we're watching gold back up over 1910, like you said. To answer your question, I already answered one of those levels. I think 1860 is your downside support. On the upside, it's still at 1980.
We got to break it.
Got to break 1980. I think there's going to be more resistance at 1980 than there is at 2100. I think
I agree.
All-time highs are going to provide less of a challenge because we've gone into this 2000, 2100 range now multiple times over the last number of years.
We have.
And every time we're inching a little bit above it. And sure, we've had these big kickbacks off of it, but it's shallower and shallower each time.
Yeah. We're at a much higher level to approach than we have been before.
So we're seeing a similar pattern in silver, but like silver tends to be just bigger swings, right?
Yeah.
Bigger percentages. Same kind of numbers. You know, my big number for silver was around $23 because that's where you had some short-term and long-term resistance levels lining up, and we've been above it and below it. But I would argue, you know, with gold, you had a decline in the spot price, low to low, but we didn't put in a lower low in the futures market. With silver, both the spot price and the futures market actually never put in a lower low. So we could have seen a really deep retracement, really pulling that bowstring back for a pretty aggressive shot, and good grief did we get one this week.
We did.
So I think we're up about 10%, about $2 on silver. What'd you say, like 3-4% just today?
Yeah, it's like 3.7, 3.8% today.
So we're more than halfway back up to that $25.30 breakout point on the top end for silver. And then the next would be 26. That's the high from this spring. And then we're on our way to 30 after that. I don't see a lot of resistance between 26 and 30. We've had too much up and down in between them. And silver's been in this climbing channel since middle of last year. You know, silver started going up before gold did.
It's true.
And it's been years, but silver's got to play catch up eventually.
Yeah, I mean, we started back in November at 18 when gold was down in the low 1600s. So we've gone from 18 to 24, and that's a pretty nice percentage gain.
Yeah, that's over 30% in less than a year. And we've been as high as 26,
Yeah.
which is even more. So yeah, I think silver, more volatile play, way undervalued compared to gold. I still, when I'm thinking about things like BRICS, when I'm thinking about things like Jackson Hole, I just, no matter what the ratio is, I guess I'm always going to have a soft spot in my heart for gold.
I'm a gold guy.
Yeah, I may be increasing my silver position a little bit over the last year for fair reason.
Yeah, I just bought a chunk yesterday.
Oh, nice.
Yeah.
I bought like 2 weeks ago when it was 25. I guess we're almost back up there.
Yeah.
But yeah, I bought some a couple weeks ago as well. So, all right, dollar or Dow? Dealer's choice, Rob, which?
Let's do dollar first, since it's a segue from the gold.
Okay. Dollar, last week when Tori and I were talking, we saw the dollar had bounced back up to the top end of a declining channel around 103. It's sort of parked there since then, so that's not surprising. We have this declining pennant formation, this declining triangle in the dollar. I'd like to see a breakout one way or the other. We're at the top end, so a top end breakout right now is more likely, or maybe we turn around and we go right back down. down. Again, we'll see what comes out of Jackson Hole. Kevin and Dave had a great conversation about that and just the concept of inflation. And more importantly, how do you change the calculation of consumer price inflation in order to get the results you want? It's the danger of being a chart guy is you can kind of make a chart say anything you want to.
Yeah.
Well, if you're a math equation guy, you can kind of make the answer anything you want to if you just change the variables in the equation.
Well, and they have. I mean, CPI is not the same reflection as it was back during the Jimmy Carter administration.
No, because back during Jimmy Carter, we still cared about the price of really unnecessary things like, say, food or gas or housing expenses or electrical costs.
Going to the doctor.
Going to the doctor. None of that matters anymore.
No, it's not important.
So,
but I did hear that they're coming out with a new indictment for Donald Trump.
Which state this time?
I think it's right out of D.C. They found that he had taken the tags off his mattresses, so they're going to go after him for that.
That's a big one.
Yeah.
I don't know what effect that's going to have on the value of the U.S. dollar, but Lord knows they're going to print more of them in order to pay for that.
Yep.
So, yeah, maybe it does actually have an impact on the value of the U.S. dollar. So, I know when we were talking a couple weeks ago, we were looking at the expected annual outflows for the U.S. government at 6.4 or 6.7 trillion and expected income of 4 something.
Right.
So we're still looking at some of the biggest inflationary increases in history, even though COVID's over and the financial crisis is over. And as far as I'm continually told, there's no inflation, we're not in recession, and everything's fine.
Yeah.
So I don't know if you saw it. There was a movie that came out a couple years ago called Don't Look Up.
I did.
Yeah,
that was a good movie.
That was a good movie. And you know what happened at the end of that movie? Nobody was saved. The meteor hit the planet and everyone died. So, yeah.
Yeah, cheerful.
Yeah. Don't look up. The don't look up analogy seems to progress beyond environmentalism into politics and certainly economics as well. Okay, last but not least, here it is. Once again, I was wrong. I've been wrong a lot lately. I thought the Dow would take another little step up. It still might. You look at the Dow chart, we had a pretty aggressive move up in the Dow, just like gold, since November of last year.
But I think it might be below its upward channel that started in March. What's it
or
showing?
very close to. By the time we put the charts together for the show, I'll have that up there, so we'll have to see.
Yeah, and even if we go back to the November lows, if you chart it back to November, it looks like the dollar has broken below that rising trend line, but I'll wait for your chart.
Even if maybe, let's say we're hitting that rising trend line, or at least on the downside, if we haven't broken below, but let's pretend we're hitting it today.
Well, definitely hitting it.
Yeah. That's going to line up with your short-term 382 fib dating back to March as well. So we've really had, from a Fibonacci level, from a trend line level, I love when indicators kind of line up at the same price point. So it is possible we see another step up, which is something that I've been hoping for. And I really wanted to see the Dow get just as close as it possibly can to breaking into new highs before we take another kind of extended period down. I really think the Dow topped out at 37,000, and without dramatic intervention from the Fed, which they're trying not to do, I don't know how it goes higher in the recessionary period that we've been in for a long time now.
I don't either, in spite of what the media is broadcasting. I think the economy is definitely floundering. Interest rates on mortgages are at another high. I can't remember if it's 20 or 30 or high. But the housing market and the farm sector, manufacturing, these are backbone industries, and I don't think they're having fun right now.
Well, and we're looking at an expectation. Well, the expectation is not next month, but the following month, another interest rate rise at that point, which is going to raise all those ships again even farther going into November. And now we're in the winter season where fuel costs go up and the general living expenses, which apparently don't count anymore against CPI, like the cost of heating your house, that's going to start going up as well. And it's going to become harder and harder to fill that gap between income and credit card expenses.
And Tory's been really good about laying all that out, consumer debt, credit card, etc. I wish he was here today. We'll have to get him on next week and let him line everybody out on what the consumer is actually dealing with right now.
Right, I think that's a good idea. So in the meantime, we'll have to get on next week and see what came out of BRICS in Jackson Hole this weekend.
Fun.
So sometimes recording on a Wednesday works out great for Fed announcements, and sometimes we're just sitting here with bated breath like everyone else is. So should be a good week. We will see how the markets get kicked around. So I'll gamble here. I think gold probably continues to rise for the next couple of days. I think the Dow might bounce, especially if gold keeps going up. If gold keeps going up, I think the Dow bounces. I think the dollar declines. Mm-hmm. So we'll see how my crystal ball looks.
I mean, that's a good read, and I do expect some profit taking at the end of the week, but pretty shallow. I don't expect it to be dramatic.
That's going to do it this week for Golden Rule Radio. Thanks again for stopping by. If you liked what you heard, hit the YouTube buttons, head on over to our website at McIlvaney.com, or give us a call at 800-525-9556 if you'd like to discuss your personal portfolio. We can be found on Twitter at ICA Gold or Facebook at McIlvaney Financial. Thanks for listening and have a great week.